Hey, it's your financial maven, Samantha Mittman-Besnoff, CPA. And for the last 30 years, yes, 30 years in the accounting world, I absolutely love sharing my insights and passion about money for individuals, entrepreneurs, and small business owners. Knowing your money and hopefully feeling less stressed about your money is what I call being financially empowered. Welcome to the Your Financial Maven podcast. Welcome to the latest episode of Your Financial Maven. I have with me today Jen Fizer, who is CEO of MKB, where she and her staff provide CFO and bookkeeping. Jen, you help business owners understand their numbers and scale with confidence, and your background does span startups to multimillion-dollar organizations. You specialize in turning the messy financials into clarity, cash flow, and profitability. You have a passion about this. You want your entrepreneurs that you work with to make smarter business decisions. So welcome, Jen, to hopefully this is the last recording. We tried this a couple weeks ago and had some technical difficulties. So welcome back, Jen.
Thank you for having me again.
Yes, definitely. So I'm going to start, and I know we had already tried to do some recording, but we're going to go back from the beginning and kind of go from there. So what is money?
Oh my gosh. Money is a tool. Money helps you get the life that you want. That's kind of how I like to look at it. It's the path to basically everything in this world, but it doesn't have to be the source of any anxiety or stress. It can be the tool that helps you get what you want.
Yes. And both from a professional, small business and a personal side, right? I mean, it's not just for small business owners or for your personal side. It is a tool in your everyday life.
Absolutely.
It is. All right. So I'm going to actually go back a little bit. I know that this is not what you set out to do, not to have your own business per se, not to be a CFO, but I want to know kind of your money story and how you got started with your business.
Well, as you mentioned, it's kind of a long, windy road to get to where I'm at. And if you had asked 18-year-old me if I would ever own a business, it would have been a definite no.
Okay.
I had no example of anybody that owned a business. I mean, my parents were like the 30-year veterans at one job kind of thing. So that's kind of just what I assumed was the normal. I also didn't have like a real career path figured out.
Wrong with that.
Yeah. Accounting kind of always was like my buddy, just because my mom kept saying my mom worked in corporate, and she was like, the accountants, they're always very stable and very
yes,
they know what's going on. Every business needs an accountant. So, I mean, I think I kind of took that advice as like, I knew I took accounting classes. I knew what it was, but I had no idea what that would look like as a career, as very few 18-year-olds probably do.
I think so. Yeah. I'll be honest. I knew I wanted to be in accounting. Like that's what I went to school with, but I didn't necessarily have an idea, like you said, what it looked like. And my path has gone up and down. I've not taken that straight, 30-year career. My husband has a 30-year career at his company, and I think he's very blessed to do that. But yeah, it's an up and down kind of a thing.
Exactly. Well, and I don't know that I have like the typical accountant's personality in this, that like I am a business owner really at heart. And I'm not going to say I don't like authority, because that's not exactly true, but I like to be the one in charge. So, anyway, got out of college. I went to college for ag business. That's what my degree was in. And thinking that I wanted to be in the ag field. So I graduated in December of 2007, which went right into a recession. So then I was like working retail, I was like an assistant manager. So then I was like, well, this sucks. I don't like this. So I kind of weaved in and out of careers. And then I also worked for a staffing agency. That was like the first job that I actually enjoyed. I worked at a staffing agency in like the sales assistant and HR, like recruiting kind of roles. And it was my first office job, we'll call it. Okay. And it has nothing to do with accounting, obviously. But what it did was teach me a lot about like talking to people and interviewing people. And it was one of those skills that I have learned so much and have taken with me through all of my other careers that I've had.
And it's still a little bit, the accounting side, right, is all about the numbers, but the human resource side, the sales side, they're still all interconnected, right? There's
Yes.
still a path in that regard. So yeah, you weren't too far off.
Yeah. So it was kind of like, I kind of look at it like pre-CFO days, I was like picking up all of these skills that had nothing to do with accounting, but it did have to do with business ownership. And so I kind of learned all of these things through all of these other different roles. And then when I finally got into, I was a CFO for a farm. So I kind of was like, oh my gosh, these are the two things that I decided that I wanted to do, right? It was accounting and farming.
Right.
And so that was like, oh, I married those two things, found my perfect job, and that's its own story. But did that for like 7 years. And then I bought a coffee shop. And once again, I put all of these different skills to good use. And then I sold that last July of 2024. And then I went to work with my friend Mills of Mills Knows Bills for, now MKB.
That Mills Knows Bills.
Went to, yeah, I I became one of her fractional CFOs. I had experience in CFO work, running my own business, all of these things. And then last March, or this March, she asked me if I wanted to buy the business, and here we are.
Wow.
So
wow. I think that's great.
That's the very long story to get.
Yeah. But it still shows that, and I say this actually to anybody that like the kids who are going into college now, like my kids, that having business classes, having accounting classes, taking that kind of side, whether you're going into it directly or not, is important when you're in college, or if you graduate high school and you're going out into the world. It's still good to take those classes, still have that idea, because it helped you, I'm sure, in your different, areas of business and running your own business too, right? I mean, that, I deal with a lot of small business owners. That's my niche now. I scaled away from just doing individual tax work, and it's really tied with business owners. But business owners are always focused on their passion, as they should. And the accounting and the finance side, while it's important to them, it's always the last thing I think that gets done. And I think that's where you guys come in for fractional CFOs and bookkeeping and help. I mean, I do, as a CPA, I will do the accounting work for some of my clients. I'll do the transactional work, but I also do other stuff. I'll do the tax work. I'll do the analysis. I do 1099 tax compliance, all of that stuff. So I'm sure that you see and you work with clients like, with your knowledge, then brings them that knowledge, because you're able to talk to them at their level, at their understanding.
Yeah. And I think that's one of those things that it is what makes me unique compared to somebody else. Like I've ran my business. And not just my accounting firm kind of business, right? Like I've been out there in the trenches. I know what they're going through. I know what it's like when you're like, I have to run payroll this week, but there's no money in the bank. How am I covering this payroll?
Yeah.
Like I have faced all of those questions and decisions on my own and had to come up with solutions for that. And, I know probably as good or better than a lot of people what it's like on a day-to-day basis.
And I think that's important when they're coming to professionals to help them, to be able to be with them at their level. I always say I'm not your typical accountant. I've been in this for 30 years, CPA for 23, but I'm also a business owner too. I mean, it's myself. I don't have staff, although I'm starting to realize I might need some admin help and some other things, which is a good thing. But it's that understanding as a business owner of, I've got bills to pay for the business and the cash flow and how that all works. And so I know that, you love to work with entrepreneurs, and you state, the whole cash in, chaos out with the cash flow space. How do you help your clients and people understand, what is cash flow, right? You and I know what cash flow is. And a lot of people out there probably do. Some of my listeners do as well. But like, why is that, I think, one of the most important things to understand with a business?
Yeah. And this is probably a line that you can either relate to or might say, I'm like, your profit and loss is lying to you, right? Like that's what people think that cash flow is, like that number that's at the bottom of the profit and loss statement. That could not be further from the truth. And you and I know that, because it's like, that's what you have to pay taxes on.
Right. That's what you have to show the government and maybe, your shareholders or whatever.
Yes,
So, yeah.
it's very rare that that's the number that's actually in your bank account at any given time. And so the cash flow comes into place because it's like, how are you actually paying the bills? Like, how are you actually making sure that everything, and it's like timing, right? Like, you might go the entire year with negative cash flow, but then at the end of the year, it's like, oh, all of a sudden we get a big deposit or something that comes in and you have all of this money. So it's like the timing, there's all these different aspects that go into cash flow. It's easy when your business is like, oh, I make the same amount every month and I can like guess or not guess. I know what bills need to come out. But when you are kind of guessing, maybe you're like, little more variable in your income.
Right.
I get that a lot. Like, how do I know what I should pay? Because I don't know what's coming in.
Right.
So all of those factor into your cash flow situation and how you can figure out what you should be prioritizing and things like that.
Yeah. And I think you're right. I think it's important. I mean, it's one of those things that, and I come across that as well. They'll look at their profit and loss statement and they could have a loss. They could have, more expenses than they brought in, let's say in any given quarter or at year end. But then I say to them, but are you still able to pay your bills? Are you able to know that you have money in the bank account and what's in that? Are you able to understand that you can still, pay for your bills? Maybe you had it more expenses because you had to buy something that you normally don't buy, right? Or spend on, and we call those one-offs in the accounting world. Maybe you had to pay extra bonuses to staff this year because you chose to do that. And from a cash flow perspective, it puts you maybe at a loss or, it brings your flow negative, but you still have the money like carrying you forward. And I think you're right. That's important to take that time to really, as I say, even for personal finances, understanding the income that's coming into you, what money are you bringing in? And then saying, okay, what is it that I'm spending and putting out? Because I'm sure you run across this too, where clients that I work with, oh, this is my credit card bill. And it's the bill that they pay that they expense, but they're not expensing every individual transaction. I'm sure you run across that, how important it is to know those individual pieces.
Yeah. And it's important to know that because how can you fix something if you don't know, like, well, I pay Amex 30 grand every month. Okay, cool. What goes into that?
This is 30 grand you're spending on.
Right. Because I don't know how to help you cut things if we don't know what we're even spending money on.
Yeah.
So,
yeah, I mean, that's true too. It's not just knowing what's going out, but analyzing that, right? I think part of the cash flow is taking the time to analyze your insurance, your utility bills, your rent, like things that
your
maybe you can.
Yeah.
Subscriptions is huge. Set it and forget it. I'm very bad about that. And I do check, but it's like,
no,
right.
That was for big corporations or small ones, I guess. Anybody that's on a subscription model, that was like the best thing that could have ever happened to their revenue, I'm sure, because it's that recurring revenue and if it's a couple bucks every month, who cares, right? But suddenly you're paying $600 a month in subscriptions and you're like,
I know, you're
like,
oh my God, how do you like figure that out? But I think it's important in that regards, that you have to master what you're doing with your money. I think you have a master your money program and kind of how you work through that to understand the different stages of, kind of where you have to go. And I'm sure you have clients that have come to you that it's just, they feel so lost. Their books are a complete mess. Like, how do you take that time to get them? Have you seen with your clients what, they come to you, it's a complete mess and they walk out the door. I'm like, wow, that success rate.
Yes, that happens fairly often. And that's generally like some clients are coming to me. They're like, everything's great. I'm making so much money. I just don't even know what to do with it. That happens occasionally, but not super often. Right.
Yeah.
Usually I don't know where my money is going. I'm making money, but I don't know where that profit is going. They feel broke even when the bank account may say differently,
right?
Because it's like constantly, maybe there's $100,000 in the bank, but they have $300,000 in bills that are sitting here. And like, how do we even manage that? So when I am first coming in, my job is to spend basically that first month, like figuring out your finances, figuring out what you're paying, who you're paying, what's extras that we could, if we need to cut stuff, then maybe that's cutting, maybe it's a revenue problem and you're spending so much of your time doing your bookkeeping that you're not out doing sales, right? Like trying to figure out how, if it's not something we can cut, how do we make sure you're making more money? And that's kind of my first 30 days is like, I'm going to figure out how to pay for myself because obviously I want to keep working.
Right.
So we're either going to find stuff to cut that is not important to the business, or I'm going to help you generate more revenue in order to get more coming in so that it's easing that pressure.
And I think that's important that you bring that up, that, there are different models out there. There's the profit first method. There's other different, models about paying yourself as the owner. And I think the clear distinction is if you're a sole proprietor or an LLC single member, when you pay yourself, it's not payroll, right? You're just pulling the money out of the business and you're using it for your personal. If you're a partnership, you're making a distribution. Again, partnerships, no payroll. Like that's a huge thing. I've come across partnerships that are paying their partners payroll. I'm like, no, you can't be doing that. And then I come across, yes, for me. But then I come across the S corporations, especially the single shareholders or couple shareholders, and they're not paying the shareholder that is the employee also. And they're just pulling money out. So I think that's important, how you pay yourself and how that gets recorded, because like you said, that could be also part of a cash flow issue.
Well, and that brings up another important point too, because I see this a lot with particularly sole proprietors and partnerships, if there's only one or two of them in there, where they're like, everything's just commingled in together, right? Like we're paying that mortgage, we're paying the credit card bills, we're paying everything. And so it's like hard to figure out, is the business profitable or do you need to cut your personal expenses?
Right. Yeah, it's a big no-no. I mean, yes, you can pull the money out of the business and use it for your personal, but if you have it all commingled in one account, there's no way to track that. And if the IRS were to send you a notice that they have questions, that's going to be a lot of hassle too, having to go through to determine, oh, this is business expense, this isn't a business expense. Even if you're just getting started out, if you can do a separate business account, highly recommend. And stick to it, right? Make sure you're sticking to it.
Yes, that's like, please transfer. Or if we're not going to transfer, if you're going to, like that, if you're going to like stick to paying things out of your business account, we need to be making sure that they are categorized that way, right? Like we need to make sure that these are obviously personal expenses that are coming out. Because you're going to have to pay income tax on that.
Oh yeah. And I will set up like, so for a partnership and an S corp, you have a distribution account. There's a specific, so I actually use that for a lot of my sole proprietors. I call it owner's draw or owner's personal expenses. And I run the personal stuff through that so that they're not, if they're not going to separate business from personal.
It's kind of that easy, like middle ground, right? Like,
yeah. I mean, it's definitely not something I recommend,
but
that's right. It is
step one to getting them there. Then that is what we will do, because then my job is then to make sure that they can actually afford to pay themselves,
right?
What they need,
whatever
to.
That is. Yes, yeah, which is important because if, like you said, if you come in and you see that they are mixing business and personal and you pull it out, and then you're able to see that personally that a lot of those expenses are personal, but from a business aspect, you're doing great, right? They can see something a little bit better because they're not mixing in what is personal. And I get this question, and I'm sure you do, is, well, what makes a business expense? Well, based off of the IRS, it has to be reasonable and it has to be something that is standard to your business. If you're running a pet shop, going out and buying that hot tub is not going to be a business expense, right? You can say, oh, I use it for the dogs, but we're going to put dogs in hot tubs, right? But you're right. I'm sure you've come across that and helping your clients understand that. And I think as you understand your cash flow, then it's talking about scaling, or if not scaling, sustaining and then scaling. So how do you kind of, get your clients to that point where they feel comfortable and then they're like, ooh, now what, right? What are those next steps kind of a thing?
Well, so I get a lot of clients, right, that are kind of in, 'cause just by nature, like the ones that are generally needing a CFO, they're usually, if they're a blue collar type business, they're in that like $1 million range. So they're starting to get some employees. Things are a little bit more complicated than just like, I'm going out in my truck, I know what I'm buying and I know
Right.
what it costs me, right?
Right.
So there's all these other things that are factoring in. And so the next step though is always like, oh, I want more of whatever. Cause like if you have more, obviously that means more profit, but that's actually not true.
Right. I was going to say
Usually
that isn't always true. Yeah. Yeah.
no, but it's just what you think.
Yeah.
And what ends up happening is that a business will start to scale. They'll start to add, and then all of a sudden it's like things have gotten out of control. They either grew too fast. They assumed, okay, well, I've got one plumber, 5 would be amazing. But maybe their business isn't set up yet to handle 5 plumbers. And they don't have the lead generation in process to be able to get that many calls. Like it's one of those things where it's so easy to grow and it's so hard on your cash flow.
Oh, yeah, definitely. I
And then
mean,
that's
yeah,
another thing. Like you've got to have some savings as as to fall back on, because if you don't, you are going to eat through that money so fast that you get to this point and it's like, I don't even know where to go from here, because that's where you get into I have payroll due on Friday and I have no money. So that's where it's like you grow too fast, you grow without a plan, you grow without looking at your margins and making sure that your prices are keeping up with what your expenses are. And all of a sudden, you find yourself in such a bind that you don't know where to go.
yeah. And then that leads to you doing things that are potentially unethical, potentially illegal, and you don't want to
Mm-hmm.
get yourself in those
No,
situations.
definitely not. The other, on the legal side, like merchant cash advance loans start to come into play, and then that creates this cycle. They're basically payday loans for businesses, right? And so it's like you get into the cycle of like you constantly have to be getting that next one in order to keep paying it. And that's really all you're doing is you're just borrowing money to be able to pay the loan, because whatever initial amount has been eaten up by usually past expenses. So you're not even like growing with that and bringing in revenue. You're just covering what was already owed. And it just becomes this huge cycle of like, you can't get out, and it becomes so daunting. And if you're not a finance person, then like trying to claw your way out of that is
It's hard.
hard.
Yeah.
And knowing like who can I get away with not paying for a little while. Like I'm not advocating for not paying at people,
Right.
but you know
Yes.
what I mean?
Not
Like who
advocating
can
that.
we put
Right.
off for 30 days and
Right.
who is going to slap a lien on me if I don't, and things like that. So that's another way that I come in and I'm like, okay, maybe we put this person or this vendor off for 30, 60 days. They're probably not going to do anything to you, and just like slow pay them a little bit. You know what? All of these little different things that you can do to help yourself get out of that hole that you may or may not be in, and just get things on the right path.
Yeah. And understand that there are professionals like Jen and myself, that there is no judgment. There is no shame in this. You are running your business. You know, you're passionate about whatever you're doing. And that's why I say that financial side of the business is not always the thing that's on the top of their mind. Getting that next product out, getting that next service out. And I think it's okay. You know, by the time they probably come to you, I think it's good, right? They might be in a situation that they're a little in over their heads, but I'm sure that they come to you and you're able to say, hey, listen, let's take a step back. Let's really look at the whole picture, because they've gotten themselves so stuck in the weeds. And I think that's important for small business owners to understand that too, that it's okay to take a step back and
Yeah.
kind of, see what's
Another
going on.
thing I happen to see a lot too, and this is very common in businesses where you do the work and then you get paid later, is you have to front all of the expenses generally for that job, right? You have to, whatever it is. So you may get to the end of the year or the end of the month and you're showing a huge profit that you now have to pay taxes on, but you have zero money because you have fronted all of the costs, all the payroll, all of the things that it took to get that job done. And that becomes its own, this is for the growth, because it becomes its own cycle of, well, I have to get a bigger job in order to pay for all of these things. And then you just dig yourself deeper too, because then it's like, okay, well, now I have to front bigger expenses. So one of the things that I like to bring up to clients is like, okay, if you're not taking deposits, you need to. If you're not doing progress pay on these jobs, you need to. All of these just like little things that you may or may not know as the business owner that are even acceptable to do, or maybe you've talked to other people, but how do you implement that? How do you keep on top of all of that invoicing? Those are all things that I
it's
like to help with.
important. Yeah. I mean, I'll be very honest. When I started 12 years ago, I didn't get paid until the returns were filed. And I started realizing that there were some people who didn't pay me. Right.
Yeah.
And that was like, this isn't happening. So I had some clients I had from the very beginning that were very good, always paid me, have never in the 12 years I've been working with them, never had an issue. But when I started taking on new clients, I'm like, I got burned one time. I took on a new client, very simple return, started doing all the work, but the client didn't like the fact that I was using a secure portal. She wasn't into all this like over the internet stuff. And the next day she was like, can I just have all my stuff? And I had already like been pretty much through most of the return and never got paid. And I decided from that point on, and we're going on maybe almost, let's see, 12 years, maybe 7, 8 years, I get a retainer up front of all my new clients. And then this past year, I implemented all clients retainer up front because I'm doing the work and I'm leaving money on the table. I am doing the work. And so, and I also implemented for me that in order for them to review their return and before I file it, they have to pay me again.
Oh, well,
right?
That's a nice one.
So they'll pay me, they get the return to review because then they just sign off on it and then they give me the electronic signature forms and then I file. But I do. So it's that shifting how you get your money in.
Yes.
So you can kind of help
that
them.
saves you from having to chase people down, right?
Yeah.
Because you might give them the return, but then it's like, oh, well, I'll pay you next week.
Yeah.
And so it elongates the amount of time that you have to go without getting paid.
And I think it's okay. Like you said, a lot of business owners don't know that they can do that. Sure. Now, if you're selling a product and you're in a retail store, it's a little different. But they have to still pay you before they walk out the door. But they don't pay you when they walk in the door. So it's,
right.
There are those things. But if you're in a service business, I absolutely say get a retainer because you're doing work for them. And I even implemented when a prospective client wants to chat with me about if I'm a good fit for them, they have to pay me for the meeting because I'm giving advice. It's a small fee, but it's a fee.
Yeah. Yeah. And that will weed out people that are wanting to waste your time, for lack of a better phrase, right?
Yeah. I mean, I said, I don't charge much for my meetings, but it's my time. And I
bet they show up.
Right.
If they pay.
and I actually, I have in there about if you don't show up, too bad. Like there are certain things if you're going to sign up and a lot of people that I come across in the service business are really starting to do that now too.
Yeah.
In that regards for cash flow and running their business.
Mm-hmm. Yeah. There's so many different little, tweaks that you can make in business that make huge differences, whether you are not even just whether you're profitable or not, but if you feel like you're profitable or not, can you pay your own bills.
Yeah. I think that's important in regard. So what else are you able to do for your clients in that CFO bookkeeping space? Whether it's coming to getting them started or scaling, or kind of keeping them steady. What are the other things that you can share that can help other businesses, as they're listening and trying to understand what they want to do and help their finances?
So as a CFO, I like to, because a lot of people ask, what is a fractional CFO? It sounds like a made up term and it kind of is, but
yeah,
on a basic level, a CFO is looking at what's coming. They're looking down the road. They're helping you avoid any potential pitfalls that your business might be coming. It's just another set of eyes that's helping you guide your business in the correct path forward. I think of bookkeeping, CPAs, your tax, those are a very important piece of the puzzle.
Absolutely.
But that's basically everything that's happened in the past is kind of how I break those down.
Yeah, understood. Yeah.
You need updated books. You need to make sure that you're I can do nothing if I'm just looking at your bank account. I'm like, I don't know. This tells me nothing. So your books have to be updated. And that's why we started offering bookkeeping services, is because a lot of clients would come in and they're like, 3-6 months behind. I'm like, well, I can't help you right now. We need to get this fixed first. So that was just kind of a byproduct of like needing good data.
But it's an
to look
important,
at.
and you're right. It's important because it is, the past or the right in this moment. But by the time you're meeting with them, it's already there, right? The numbers are the numbers.
Exactly.
And I tell people that all the time. When your books are up to date and clean and you've done the right things, and then you go to do the taxes, the numbers are the numbers. You can't change that when it goes on the tax return. As much as you might want to, you can't.
You can't change the past,
right?
But you can use that to help guide your future, right?
Yeah.
Like if you have updated books, you can start looking at things like, okay, what does my average March look like? And start breaking that down by month. I like to look at trends a lot of times because for many, many reasons, but when you look at trends, it's like, okay, are we generally busy in the summer? Or is September, we fall off a cliff, so that you can start preparing for those things with the cash flow. Because if you're just operating under this illusion that every month is going to be good and every month is the same, you'll never see that drop coming, even though it happens every year.
Right.
And business owners have like the best and worst memory about things.
I do too, but yes.
Yeah. But it's like, oh yeah, this happens every year, but they don't think about that in advance. It's like, oh shoot, yeah, we had a bad September. Well, yeah, I guess that does happen every year. Like kids go back to school and people put things on hold, whatever it may be. And so it becomes this like, okay, well, let's just look at the numbers over the past couple of years and see what they're telling us so that like we can prepare for that in advance. And then you can start looking at averages, like what are your average monthly expenses? What are your operating expenses every month? Because that's like your basics, right? That's your rent, your utilities, things that you are going to have to pay, regardless of whether you sell a dime or not.
That is true. And that's important too, because I don't think business owners understand that nuance too, right? That, and it goes also for nonprofits, right? Business owners and nonprofits, it's what are the things that no matter what, they have to get paid. And then everything else is kind of extra.
Yeah, because a lot of people actually will do it backwards. They'll be like, oh, well, I know that my coffee costs me X dollars per cup. And so they'll like have all of those things figured out. And I'm like, yes, that's great. I want you to know those things.
Right.
But actually your rent, you have to pay it if you're going to be open or not. So we need to take that right off the top. How many cups of coffee do you have to sell just to even be in your space?
Right. Like, what do you have to do to like, But you're right. The rent, the utilities, the internet, maybe you've purchased equipment and you're paying that equipment off. Maybe you have a loan that you borrowed money. Those are things that are cash flow. Like you have to have the cash flow to time it out, right? Cash flow is timing everything out so that you can be successful in your business.
Well, and this goes into a great conversation that I like to have is because when you're projecting your cash flow, people will put, they're like, oh, I think that I need like X amount for my whatever vendor order every month. And so they'll have all of these things kind of in their mind about what they need to pay. But what I like to do is like, when you're look at the past 12 months, 24 months, whatever is kind of like in that season, and take your average operating expenses per week, take your average COGS per week. Right.
Cost of goods sold, for those that don't know what COGS are.
Goods sold. Take how much you want to pay yourself per week, and then take whatever debt payments you have and break those down by week. So you get this average that will be, maybe you need $10,000 per month or per week, just to cover all of those things. And that's kind of where I come up with a break even for like, it's a very like easy way to look at it. That's like, because a lot of people are like, I don't even know what I need to break even. I'm like, okay, well, let's just look at your averages, right? Like, what is it per week? This is what it's going to cost you to operate your business. And I like to look at it on a weekly basis instead of like on a monthly basis, because sometimes the monthly looks overwhelming in the sense of like timing. So if we break it down per week, and then this kind of gets into the profit first. I'm like, have a couple bank accounts where you're like, maybe you don't order product every week, but set aside that money as if
Oh,
you do.
yeah. Yeah, that's a good
Your
idea.
rent. Let's
Right.
say your rent is $4,000 per month. You need to put $1,000 per week into a bank account that's saving for that payment.
And it goes the same for estimated taxes too. Especially if you are a sole proprietor or a partner in a partnership, you have to pay self-employment tax, and that is your employer and employee pieces of Social Security and Medicare. And even though you get a little bit of a benefit when you file it on your return, you still need to know that you can cover that. Because then this is where I'm sure I don't know if you've come across this. I say to my clients, it's not only self-employment tax, the business income, if you make income or even loss, but the business income that you make then also gets taxed at your earned income rate because it's money you've earned. I've had clients go, I'm getting double taxed. I'm like, well, if you want to see it that way, but some of the tax is FICA and Medicare, and some of the tax is your earned income. So, you have to be aware of that as well.
Yes. And so those are conversations that I'm generally, depends on where the business is at profit wise and whether they're even paying themselves at that point. Um, but those are things that I like definitely on a quarterly basis. We are at least evaluating whether we need to be starting to move some time, move some money into savings for taxes. Where are we at profit wise? Because we need to be setting some of that money away.
I think that's good too. Even when you set it away, put it in an account that's good. Yeah, the interest rates aren't great, but if you're earning a little bit, like I kind of for myself will put some money aside and then I'll see what the interest has built up over time. And then I'll pull that piece out and use it for some other things in the business or to pay myself or to like use it for something extra. Because there's growth. I mean, I have a couple things in higher yield money markets that are doing higher interest, but every little bit counts in that regards.
Exactly. That's something that's like, it's so easy to skip over that and to not think about taxes because, they're coming around once a year. Maybe if you're paying quarterly, maybe you're ahead of the game, but a lot of times not. Or you're not paying like that first year that you're profitable might be that first year where it comes as a huge surprise that you need to pay taxes.
Yeah. And I think that's what, I've had people say, well, what if I choose not to pay estimated taxes? And I'll say, you don't have to. But the problem is when you go to file your taxes, you will get a higher tax bill and you'll get hit with an underpayment penalty. If you're making, if you're just getting started out and you have some profit for the year and you're not, making hundreds and thousands of dollars, you're fine if you don't. But as you grow, it's important to have that evaluated. I evaluate my clients on a quarterly basis. I'm like, okay, and sometimes that quarter might have a loss in it, right? For whatever reason. And then I say, all right, we'll wait till next quarter. And then when I get to like third and fourth quarter, I look at the whole year to say, yeah, let's pay something.
Kind of balance with that
Yeah.
or,
Yeah.
pay a
Especially
little
if they've had a
more.
loss in a quarter, it's a quarter. It's not the whole year if you're doing really well.
Yeah. So I think like you and I are probably like, we're kind of working on the same things, but in a different way, right?
Absolutely,
Like we're
absolutely.
trying to not have any surprises come up and taxes are all, nobody likes paying taxes,
No,
right? Like
I don't even like it. I tell people all the time, I'm like, I have my own business and I still put in, estimated taxes and we still have to pay money at the end of the year. And, my husband has the W-2 job, but that doesn't, there still are things that, the last few years under the 2017 tax law. And I tried to tell business owners this too, especially those that were sole proprietors, that if you have somebody who is in your, if you're filing jointly and they're in a W-2 wage job, they need to check to make sure they're having enough withholding because then that also plays into it. I think the idea of cash flow and the planning isn't just you, but kind of if you
like
are
their
in a
household.
relationship, right, that everything, because your business is contributing to all of that and how that all
And that
plays
can be a
out.
surprise too, because let's say that your business, maybe you're married and your business made very little, but if your partner and has a W-2 and maybe they're not taking as much out, or I know there's like, does your spouse work, or do they, like you have to account for that in order to be able to make sure that they're getting enough taxes taken out of theirs, especially if it bumps you into a much higher tax bracket or things like that. So, and I know they've changed the W-4
Yeah,
several
there's
times.
changes
It's a
to the
little trickier.
W-4. There's change. We just had a new tax law that just passed. So there's changes with the OBBA now, and with regards to, and this is something I'm sure you're going to come across with the overtime and the tips, because the tracking of all that will now change, I think, the cash flow and how you as a business figure that out as well. And I'm sure you're going to start to see more of that because, and as I have been talking about, the whole no tax on tip, no tax on overtime, you're still having to report that income. That's still your income. And the business who you work for, whether it's a entrepreneur or a partnership, they have to record it properly. They have to make sure
it's only up to a certain amount,
it
right?
is.
Like
It's
it's not
only
an
up to
endless
right.
amount of tips that you don't have to pay
Correct.
taxes
I think
on.
it's 25,000 is what they settled on, but it's still the idea that as a business owner, you're now as we're coming into a new year, there's something new now you have to add to
And
your
that's where,
stress.
like having somebody like you where you are staying on top of the tax law that's constantly changing and knowing these things where you can help ahead of time, be more proactive with these changes rather than just like, oh, it's the end of the year. Oh shoot, we did this completely wrong and now we have to fix it.
But you as a CFO and your bookkeeping side too of your business can help in the regards of that planning, right? If you're doing your cash flow planning and you're figuring things out, I think that on some level that actually benefits more because you might, you don't do the tax side of things, but you're still affecting that. So like, I think having that planning. Is there anything else, anything that, you want to touch on kind of what you do or insights that, my listeners would really be able to, take from this and go, ooh, okay, I had fun of that.
This is great question because I think one of these phrases that you hear that gets thrown a lot around a lot is like know your numbers, but it's like what the heck does that mean?
Know your
Like what
numbers.
numbers do I need to know?
Right.
And the problem with that is that it could be different from every business.
Absolutely.
And it may be one of those things where it's like you need to figure out what your numbers are. And so one of the things that I like to do is like set KPIs with my clients so that they know what numbers they're trying to hit so that everything else falls into place. So sometimes it's a sales goal that we are trying to reach because I know if we hit this amount per week or per month, then everything else just kind of like falls the way that it should be. Or maybe there's these 3 things that need to happen. Like we keep operating expenses at 10% and then your sales are X dollars. And like there's these different things that kind of come into play. And I'm not going to say like generally most businesses are going to have like similar KPIs, but like knowing what KPI number for your business makes sense and makes everything, it can make a huge difference. Like, let's say that 2% in operating expenses could be the difference between a loss or making like, I don't know, $200,000, depending on how big your business is, right?
Right.
And so there's just these things that it's like, it can make a big, and especially when you compound those things month after month. How do we find the right kind of puzzle piece of numbers that makes your business operate efficiently and gets you all of the things that you want? Going back to what money is, right? We're all working for a reason.
Absolutely.
So how do we make sure that you're accomplishing your personal goals, your business goals, and all of those things?
Yeah. And I think too, business owners need to realize at the end of the day, it is their business. Yes. They hire people, they have staff, they want to have that care and concern or, keep those staff, but sometimes they have to make some hard decisions in order to have that. And unfortunately or fortunately, it's not personal in that regards. When it comes to the business side of it, not everything that a business does is personal. It's based off of the planning and the numbers and the goals, and businesses have to be willing to make those changes.
Yes. And this is like a lot of times my clients initially. They'll think that I'm coming in to be like the bad guy. Like
Right.
I'm going to come in and I'm going to tell them they have to cut all these people and like slash. But if somebody comes into me and they're like, I know we're not profitable, but I don't want to cut expenses. Like we need to like I will work with whatever it is that somebody
Okay.
wants to work with.
Okay.
So like for instance, I had a client say that to me last fall. They started about a year ago and they're like, I know that we're not making as much money, but I also don't want to lose anybody. They was mostly, they're just paying payroll for the most part. They didn't want to have to make any cuts. I was like, that's fine. But that means that we're going to have to increase the revenue pretty drastically. And that means that you're going to have to work harder.
Yeah, you have to work harder and you might have to raise prices. And along the way, you're going to, potentially lose people.
Exactly. So, and I've had other ones. My job is basically to ask the tough questions. And if I am starting to see something, I'm like, okay, maybe you have somebody that's the right person, but not in the right seat, right? Like maybe they're good for the business, but they're doing a terrible job in that particular role. And maybe they'd be better suited for something else. And we can like, if they're in sales, but they hate like calling people.
Yeah, and they're not doing what they need to do.
Maybe they can be, another role in your business, but they're not meeting the needs of the business. So it's not my job to be like, you need to fire this person, but
yeah,
it could be, maybe we just need to have a conversation about what's best for them and the business.
Yeah.
So
how does it look for you for your business? Because I think that also helps. Like you said, at the end of the day, if you have these understandings and the cash flow is working the way you need it to, and you're meeting your goals, then I think you'll find over time, right? It takes time. And, I sell businesses, your first few years, you might not make or see that you're making anything. I've had that too. We're bringing in money, but we're still at a loss. And I've had some clients like that. And I said, but you just started. And your expenses are going to be higher when you just start out because people don't know you're out there. But you have to give it time to let it grow.
And I'm sure you see this a lot too, where it's like, oh, you're a business owner. You should be making so much money. Like they only look at the revenue side of things. Like, oh, you're charging X amount and you have how many clients?
Right.
It's like, well, there's a lot of things that I have to pay for on this back end to make these possible.
Oh yeah.
And so those are things like when you're starting a business, you don't think about either. If you have no experience running a business, like all of a sudden it's like, why is this so expensive? Why am I not getting you to keep any of this money? And like to your point, like sometimes it's just those first couple of years, you have to sacrifice your own needs and wants for the sake of the business.
Oh yeah. Oh yeah.
Because if you do it the opposite, if you pull all of the money from the business at all, you're never going to move forward. You're never going to get to where you want.
I agree. I mean, I think it is definitely something that, and I go through ebbs and flows. It's not tax season. Then I still have monthly clients, but of course I want to scale. I want to grow those clients, but it's trying to teach the business owners that if you're getting started, or even if you've been in the business for a while, right? Businesses go through ups and downs. And so if you're feeling you're starting to go down, let's reevaluate, right? We have to see where that is going. And I think you're right. It comes back to kind of what we talked about earlier of just looking at profit and loss isn't going to give you that answer to your business.
Exactly. And that's like at different revenue points too, you'll get that too. Like you might be maybe 0 to 100,000 is like really easy.
Yeah.
And then you get to 100,000 and it's like, well, now I have to hire people because I can't actually keep up with everything. And now I don't have any money.
Right.
So
how did all that work?
Like all of these ups and downs. And it's that constant like climbing the mountain, but then you'll be like, oh, you're getting somewhere. And then you're like, slide down, have an avalanche kind of thing. And then you got to climb back up, but it's worth it. You'll just keep going.
Absolutely. Any other tips or insights you have?
Oh gosh. Well, if anybody wants to, I always offer a free call for anybody that wants like maybe I should take you like your advice and start charging for that.
Yeah.
But if somebody doesn't understand how to read a P&L or how to understand like how their financials work together, I'm always more than happy to walk them through and tell them like, I'll even do Loom videos if people send them to me and be like, okay, this is what I'm seeing. You might have a reason for this being this way, but this is what's jumping out at me. I like doing those with people because it's like you'll start to see some insights that maybe you've just never thought about before.
Yeah. Yeah. Jen, this has been fabulous. I think it gives people a little more insight in what fractional CFOs can do, what you do in particular. I can definitely tell that you really take your clients to heart and just work with them. And being and dealing with finances can be very stressful for people. So how can anybody find you?
So our website is mkbcfo.com, or you can email me at jen@mkbcfo.com. Find us on Facebook, Instagram.
And I'll have all of that in the show notes so people can find you.
We do have, like videos and reels and
great.
YouTube and all of that. So there's always tips and things on our social media.
I love it.
Just drop by and like them.
I love it. Jen, thank you so much. I'm glad this time around we got all the technical things worked out. Third time's a charm, I guess, right?
Exactly.
Yeah. Well, thank you so much for joining me on Your Financial Maven.
Thank you.
Follow, like, and subscribe to Your Financial Maven wherever you listen to your podcasts. And make sure that you leave your money stories or questions for me at www.yourfinancialmavenpodcast.com. I cannot wait to hear what you have to say about money. The purpose of this podcast is to provide general information on the subjects discussed. It is for educational, informational, and entertainment purposes only. It is not meant to resolve your specific financial needs or situations. Please consult with your CPA, tax, or financial professionals. Your Financial Maven is hosted and produced by Samantha M. Besnoff, CPA, and Your Financial Maven, LLC. Editing is done by Chris Zarnock of KM Zen Creative. Music is written, composed, and performed by Daniel Shore.